Well, we'll see. But to me, it looks like an awfully good quarter. Record number of units, 340,000 units sold. Looking to me like a $22 billion quarter, another record, 62% year-over-year growth, and their 13th consecutive quarter of profitability. What's not to like about that story? We'll see. But Tesla appears to be at the top of their game.
Yeah, what about this idea of being able to hit that target of 50% on production? Do you think they'll be able to do that? That seems to be the most critical issue at the current moment.
I think they will. And when you're talking about 50% growth, that's in terms of units. I think revenues may be the bigger issue, but I think they will hit 50% for the year. What most people don't understand is most EV makers are struggling now with supply chain issues. They might have one factory, possibly two, in place. Tesla has 4 factories fully operational and hitting maximum capability. Q3 could have delivered more units, but Austin and Berlin weren't at full production scope. They will be in Q4. I think Tesla is going to post a huge number in Q4, possibly in the 450, 500,000 unit range. I think they'll be at over 50% unit growth. Again, 62% revenue growth. Nobody else in the auto world is growing at anywhere near that rate, except for the Chinese. And that's where the big battleground appears to be.
So put that into perspective then, not only the competition issues coming out of China, you've got U.S. automakers obviously ramping up their own EV production. You have the prospects of lockdowns at any moment through the winter or, thereafter in China. That has to have some impact to the projections that the company lays out, doesn't it?
Well, there's lots of things to worry about, including a recession, but you have to ask yourself, who's best positioned to win in each scenario? Again, Tesla has auto factories in Shanghai, in the United States, in Europe. No one else has that. Again, it's also important to note the profitability factor. Industry auto average, 4.3% net margins. Tesla's sitting here at 13 to 14%. So you've got one of the fastest growing auto companies in the world, highest profitability, best brand name. It's going to be awfully hard to displace them. But as you point out, for the first time, I think they have a real challenger. That challenger is named BYD. BYD will likely hit 1 million EV units produced and sold this year. So that's something to keep your eye on. In contrast, and it's just good to compare, Ford probably hits 60,000 units and GM struggling to hit 50,000. They're barely at 4 or 5% of Tesla. So right now, it looks like a Tesla-Chinese battle. Volkswagen's in a solid third place. We'll see what they can do globally. But in terms of the speed, it's Tesla and the Chinese.
What do you make of the fact that gross margins, closely watched in any business these days, were a little bit soft?
So, again, it's better than it has been, but still better than all the others. I'm not bothered by that in the least. And the reason is Tesla invested hugely in the new facility in Austin and Berlin. Those are now up to nearly full capacity. So that's looking good. They're also quietly putting down new lines for the semi-truck, which they're going to start shipping in Q4, and then the much-awaited Cybertruck that has over 1 million orders. So Tesla, to most any standards, has been investing wisely for the future. Another point that a lot of investors miss is they've already manufactured but not delivered 22,000 vehicles. So literally on day one of the quarter, they're going to start out with a pretty big jump toward what I think is going to be a historic Q4.
What about the overhang of potential stock sales to fund the Twitter deal? I can't imagine you're not concerned as a fellow shareholder about the prospects of that.
Well, look, all things being equal, I would love it if Tesla and Elon would stay focused on making great cars. But look, he's the wealthiest person in the world. He can afford to sell a few shares. I don't think it'll have a long-term impact on the share price. What people are really looking at are 3 things. Have you solved the supply chain issues, and do you have the manufacturing capability to continue to grow, as you said, 50% a year in units and 60% in revenues? Tesla's way out front on manufacturing capability, way out front on putting supply chains in place, already has agreements with the major lithium producers, the best brand in the world, and a global selling network. So, by the way, they just became the #1 seller in Germany ahead of Golf, not EVs, of all cars. So there's international appeal. They seem to be well positioned. For the next year at least, they're going to be tough to beat.